Vincenzo's Go Crypto Investing this October the 28th, 2025, I believe. Silver Bullion video, cryptocurrencies, asset millionaire club, how to become an asset millionaire. That's what we're here all about, to become asset millionaires together via steady investing, simple rules of debt-free living, living below your means, not getting lifestyle creep as you start making more money, having a somewhat frugal lifestyle while you save and invest while being out of debt, no car payments, no credit card debt, have a good cash supply earning 3 to 5%, and then steady invest into your 401k, into your real estate, into your stocks, into your multifaceted equity portfolio, asset based to become an asset millionaire, right? And you can see gold and silver are still down. Gold's down now to 3,900. It was down better than $100 an ounce earlier today. It's starting to make a recovery. Silver's had the bigger bounce back today, as silver was down several percent today, and it's actually up almost 4% from its low in the spot price and the futures. The mining stocks were down big this morning. They're slowly starting to rebound today. Could this be a local bottom after a fairly healthy correction in the silver and gold bullion market, which it needed because it was just going crazy? It could be. You can see in the daily time frame in the silver bullion, the futures market, we went from 53.90 and we've been down better than 15.75%. And we hit the 50-day moving average in the daily time frame. And you can see along the way in futures, every time it sold off, you can see the last big sell-off before the big move, which it often does. A big sell-off before a big move was back in April. It went from $35.48 and it wicked down 22.83% down to 27.35. And then it had a ferocious rally back. And that's actually what catapulted it to the next level, to the all-time high in nominal value, not just inflation adjusted yet, but nominally it did. That made a 1x move from that capitulation, and that probably got a lot of people back here. I remember when that happened, it wiped away some pretty nice gains for a few weeks to a month, and that probably got a lot of people to capitulate out. I know a few people personally that this did drive them out because the price and the gold and silver bullion were skyrocketing and their stocks were going up, and that made them capitulate out. I think that's what's going on here. I'm not a financial advisor. I would never tell you to buy, sell, trade, or do anything. I'm just sharing my thoughts and opinions on the market, where it's going, where it's been, how it's going to get there, and why it's going to happen. Also, what I am doing in my own personal life as I'm just documenting it live for you guys, how I am on my way to becoming an asset millionaire and what I am doing to achieve asset millionaire, right? But it might be a good time to start looking at some of these. They're still way up from their lows, but they've had a pretty good correction, because you can look at it in the Pan America Silver. It did not create a new all-time high yet. It's down 20% from its high. That's right, 20% from its high. That's a big fall. But yeah, it's not as cheap as $11.80 back. I can't believe it was $11.80 back in the spring. That's crazy. After it had that brief capitulation. Oh, that was 2024. That was a year and a half ago. So in a year and a half, it's went up 254 or 200. It was 254. So here's, I see, if you caught the low, it went up and it was up 240%. Now at current price, it's only up 181%, right? So it could be a good time to buy. I'm not telling you to buy, but it's something to pay attention to. We got to keep this moving. It's at 1207. If we go look at what you guys are here for, the Bitcoin price right now, you can see we're going to scroll across here. The Bitcoin, you can see the Bitcoin from yesterday. It's just trading essentially sideways right now. It's still above the critical 50-day moving average, 100-day moving average, and well above the 200-day moving average right now. But you can see if we zoom into the hour time frame, it's sitting and trading. And what it's got to do now, it's going to make a decision now on this consolidation A. It's going to make a decision to pump to the upside and come up here back to the major upper resistance, which is the 2.5, the 3+ year rising channel. And that would be the bullish case. You need to get back on top and in this channel like it did here. But this time you would need to hold it and not slip out of it like you did here, right? So that's what you're trying to look for in the bullish scenario. The bearish scenario is you're going to continue to trade sideways. You're going to continue to lose some momentum. You're going to continue to have some overhead sellers come in with lower volume, and you're going to slip if it's bearish, these two major moving averages, you're eventually not going to be able to hold the 200 day there because you already came down here. And that's how you work your way down towards that $95,000 by slipping the 50-day initially, then the 100-day, because then when you come back down to that 200 day at 108,290 and 22 cents, you would not be able to hold that. You would come down to 95,000. And that would be in the short to medium term. Would we have to bring in some of these lower targets? But because that is the 50-day moving average in the weekly time frame there in red, and that is the 100-day moving average at 79,000 blue, horizontal left to right, right? So if you slip the daily time frame 200-day moving average right here, you're going to the 50-day and the monthly for the first time in quite some time, because the last time, if you look left, that we hit that was when we were actually breaching it and going over it after a brief retest back here about 8, 9 months ago, back in the springtime of 2025, right? So that's what we're looking at in the Bitcoin price. The Ethereum price is the same thing. We got our bullish and bearish scenarios that we talked about yesterday. You can see right now we're sitting just above that critical neckline resist support, which it is now at 4,106.83. And then we're sitting just below the 50-day moving average in the daily time frame at 41.37. The bearish scenario is in red there, where you slip and can't hold this neckline support. You can't hold the 100-day moving average in the daily at 39.79. And that would eventually force you back down to the 200-day moving average, which you would not be able to hold, and you would come down to the 34.66, the top part of this green support and resistance box, which would act as support because you're coming at it from above. And this is right exactly to where you wicked. And I think that if you can't hold that, you would have to make full body candle hits down here, not just a wick. So that's what I'm looking at, but that would also bring it to 3,068.82 in the play, which is the bottom part of that support and resistance box, right? So that's very interesting what's going on. The bullish scenario would be to stay above this, hold support on the neckline support, and then work your way up near the all-time high, which is 49.60, right? And you'd have to breach that, hit 5,000 for the first time, because our multi-year target is $10,964. And on a brief synopsis why that is the case, if you haven't seen this pattern, we had a megaphone pattern that formed here over a couple of years, where you rallied from your swing low, forms like a flagpole with a flag. Then you have your horizontal major overhead resistance over more than a year and more than 3 times hitting. And then you had your descending underneath support, multiple hits over multiple years. And that forms a megaphone, right? If you drew like the voice sound like that, the megaphone, and somebody talking over there. And then you take a targeted move from the breakout, and that's where you get to $10,964. Does that mean it's going there today, yesterday, tomorrow, next month? No, but I think over the next few years, if this bull market continues and crypto actually does continue to appreciate and not collapse in upon itself, uh, that would be your technical target, but that doesn't feasibly mean it has to go there, just because technically it is a pattern, right? Because fundamentals and what's real world going on has more to do with than a chart you can draw on, right? Uh, then XLM is the same thing. You're sitting just above the 50-day moving average in the weekly time frame, but you're still below the 200-day. You're still below the freshly minted 50-day bearish cross, getting underneath the 100-day moving average there. And it's still, but it is above the 31 cents. It is above the 50-day moving average in the weekly time frame. If we want to get bullish, you got to get above these 3 moving averages and then get on top of the top part of this green support and resistance box. That's how you flip this back to bullish. The bearish scenario is you get up to there, get rejected, and or you just get rejected where you at. You slip to 31 cents, you slip to 31 and a half 50-day moving average in the weekly, and you end up down here at the 100-day moving average in the weekly time frame in blue down there, right? So that's your two options here in the short term. The volume continues to decline. It's the same thing with the XRP, just at a different price. You can see we're slightly higher. We are above the $2.55. Now to stay bullish, you need to stay and hold this now. You can see you're running up against the moving averages. You hit the 50-day moving average right there twice, yesterday and today, and you got rejected. To get bullish, you need to get above these and stay above these, or else what would happen here would be just a fake out to the upside, and kind of this dinosaur pattern that's here, where you got the big down or the turtle, right? See that? Then you got the turtle. Then you have his head right there. That's a bullish continuation pattern, but a bearish reversal pattern at the top. And if it breaks down and can't stay above that, you're going to initially come back down to the 255 and not hold it. And you would fall very, very quickly back down to the weekly time frame moving average at $2.33. And then eventually all the way down to the $1.77. If you want to avert that and you want to get back to the super euphoric bullish action in the short term, you have to stay above these moving averages. And then you have to get on top of this 307, hold it as support, and that is your critical one that could catapult you to the $5.94. But you first must get on top of that 307 and hold it for once, right? I want to look at some news here before I let you go and have to get back in to the shithole job that I have. You can see crypto M2 and monetary policy, right? And some of the things that sort of happen. M2 is measured of a tool amount of money ready available for spending and investing in the US economy. Bitcoin scarcity, fixed supply is often touted as a superior characteristic compared to the M2 ultimate and expanding supply, especially during periods of high M2 growth. XRP, designed for payments, has a centralized structure and a larger total supply, making its relationship to broader monetary metrics like M2 different from Bitcoin. The U.S. government actions typically executed by the Federal Reserve, the central banks, not the direct government, but at the direction of the direct government under the table, significantly influence the amount of money in the economy. M2, consequently, the demand for high risk, high return assets like crypto. Government is buying bonds and treasuries. When the Fed buys bonds, treasuries known as QE or quantitative easing, it injects liquidity, and that's what uh, a market like crypto needed. It must have constant liquidity, or it rolls over and collapses in upon itself because there is really no product there that they're selling, right? Into the banking system, which typically lends to increase in the M2 money supply mechanism. The Fed pays for the bonds with newly created money, electronic bank reserves, to increase the supply of the money available in the financial system, lowering interest rates, stimulus borrowing and spending, increasing liquidity. A lot of cheap money is flowing through the system. Devaluation concerns. The rapid expansion of M2 can lead to fears and the truth and the reality of devastation to the US dollar, debasement of the US dollar, inflationary to products because of the loss of value. Bitcoin tends to appreciate significantly. It's viewed as a hard money asset and hedge against the inflation and devaluation of fiat currency and expanding the M2 money supply. The influx of liquidity also seeks riskier, higher reward assets, and that's what goes on. And that's why when they tighten the supply, these things start to have their bear markets. When the Fed stops buying or actively sells its bond holdings known as quantitative tightening, it removes liquidity from the banking system, which typically leads to a slowing and contraction of the M2 money supply. When the Fed sells bonds, the buyer pays for it, effectively removing that money from the circulating supply, which slows its growth. Higher interest rates make borrowing more expensive, decrease liquidity. Money becomes tighter and less available. Risk off settlement. Investors become more cautious and seek safer investments like still funny enough, the US dollar, but more traditionally and more of gold and silver bullion, right? Bitcoin tends to depreciate as liquidity dries up and risk settlement sours. Investors often sell riskier assets like Bitcoin and move into cash or less volatile instruments. XRP tends to depreciate similar to Bitcoin as the overall market shrinks and risk taking declines, right? So that's what goes on there. With the riskier assets. And that's why you got to watch the M2 money supply and what the government's doing in their financial situation at the current time. Peace and love. The rock side, bro. Jay.